Good evening. Welcome to another episode of COVIDCASTJA. You know, blockbuster movies, those big movies, always have to have a sequel. So there's always a part two. And apparently, how to create and read business financial statements is the blockbuster discussion. So we are here for part two. We have heard you, we've seen the comments, we've gotten the DMs, and we know that you wanted us to delve deeper. The fantastic thing is that our guests from last week, Mark Gale and Paul Cole, are actually in the audience and they will also be answering questions. Please send in your questions and your comments because we want to continue this discussion. What have we been discussing? We've been discussing the three major financial statements: your income statement, your balance sheet, and the very important cash flow statement. With all the questions that came in, we thought we would bring in two other trainers, two other experts, two other voices for you to ask questions, but for us to delve even deeper into this discussion of financial statements. So, did you get the memo from last week? I hope you did. And if you didn't, please send an email to sme@psoj.org. Great information that breaks this discussion down. If you already have your memo, pull it out and have it as your guide with you. So today we're joined by two remarkable guests, Ms. Latoya Fuller and Mr. Ryan Campbell. Now, Latoya is a chartered accountant and business strategist with over 16 years experience working in corporate Jamaica for multinational companies. So when you see her, she don't look a day over 16, but she has a whole lot of experience. Latoya has served as a senior manager in the financial sector and an accountant in charge in a Big Four accounting firm. She has served on cross-functional operational teams in Canada and the USVI and led reviews in the Bahamas and the Cayman Islands. In addition to her extensive accounting and banking experience, Latoya is a trainer and project consultant adept at risk analysis. She's a fellow of the Association of Chartered Certified Accountants, a fellow of the Institute of Chartered Accountants of Jamaica, and a member of the advisory panel at the Jamaica Business Development Corporation. Welcome, Latoya. We are also joined. Hi, Latoya. I tell you, she don't look a day over 16. Latoya, you're on mute. Well, Latoya unmutes. Also,
hi, Michelle. Thanks for having me.
Thank you so much for taking the time to spend with us this evening, Latoya. And Latoya, we're going to also be joined by Ryan Campbell. Now, Ryan is an entrepreneur, financial coach, and investment advisor. So he's packing up power punch too. He's the founder and managing director of Shore Financial Services Limited. He's also a chartered accountant with the Institute of Chartered Accountants in Jamaica. And in addition, he's also the founder and managing director of 3 additional businesses in varying industries. And some of them, you know, Natural Choice Health Food Store, Redline Recovery Services, which is trucking and wrecking, and AccuShore Group Limited, a venture capital firm. So Ryan has his MSc in accounting from the University of the West Indies and 2 BScs from Northern Caribbean University, 1 in business and 1 in computer science. Uno couldn't ask for a better group than this tonight. Ryan, thank you for joining us. Thank you very much, Latoya and Ryan. And as you would have heard, last week we had some great discussion, but very importantly, the questions were coming in as the audience wanted us to dig deeper in the creation and reading of business financial statements. So, Latoya, Ryan, should I say beauty before? So let me just start with Latoya. I'm going to start with you, Latoya. Latoya, what is the income statement and why do we prepare this monthly?
Okay, Rochelle, very good question. Now, if you want to know if your company is making profit, you need to prepare an income statement. What the income statement does, it tells you how the company makes money and it tells you how the company spends its money. So in other words, it has its revenues and it has its expenses. Now, sometimes it gets very complicated, and what we're here today is to simplify it. Everything on the income statement, it's either revenue or expense, geared towards telling you how do you make money.
Okay, so for our viewers who just, because we looked at income statements last week, but we want to delve a little deeper. Let's look at an income statement together, and you can take us through, and we'll be answering now some of the questions that have come up over the last week. So let's look at the income statement in detail. Latoya, over to you.
Okay, so we have here before us a sample income statement. It has sales revenue. Now, some companies call it income. It depends on which industry you're in. If you're in the banking industry, it's interest income. If you're selling goods, you own a store, you're selling goods, then it is revenue or sales, right? But whatever it is, that is the first line item. It's your top line. It's money that the company is earning. Now, to simplify it, everything after that, most of the things after that are general expenses. So cost of goods sold is what you generate, it's what you spend in order to earn. And then you go down, you have your gross profit. Now,
okay, let me just stop you here for a minute, because you've nicely just introduced that income statement based on what you talked about before, the revenue and the expenses. And Royan, I know you also went through this line by line. So let me pull you in now to go through the line by line too with us.
Definitely so. So, as Latoya was saying earlier, that your revenue, your sales revenue is basically your money coming in from sales, right? And she outlined different industry call it different thing, but it is simply the money coming in from your sales or from whatever operation you're doing. Cost of goods sold, if you sell items, if you're in the market of selling goods and goods, then that would actually go towards what you spend to buy back your stuff. So, for example, if you're selling lemonade, it is simple. Cost of goods sold, it is, put it simply, would have been your cost for sugar, lime, and water, right? So you purchase those are your cost of goods sold. After you take away your cost of goods sold from your sales, then you would have been left in your hand with your gross profit. General expenses that would cover a range of other expenses. Your staff that you pay, your light bill that you use, all of those things, your rent if you pay rent, all of those will fall under general and administrative expenses along with others, right? And then after you less that, you would have been left with operating profit, right? No interest come from that yet. So interest expense, if you would have borrowed a loan to start the business, then interest would actually fall right there. And after that, you have earning before taxes. So now you know that taxation is a must above certain threshold, and as such, your taxes would come in. We use, I think we use 20% here for just for simplicity purposes in this example. But your taxes will come after, right? And you now have your earning after tax. And if you're a publicly traded company, then you would now go to your common stock dividend and all of those things after. And whatever increase you have, that goes towards your retained earning. Retained earning, basically money that is left in the business after everything is paid, right? And that can be used to reinvest or other purposes. That's basically the income statement in a nutshell.
Okay, very nicely put. Ryan, just to go back to two of those line items, you were going through cost of goods sold, as opposed to general and administrative expense. And I know sometimes business owners get a little confused as to which, where to put particular items. Can you just touch back on what is incorporated in cost of goods sold to give you your gross profit versus your general and administrative expenses?
Definitely so. All right. So direct expenses goes towards cost of goods sold. whatever you spend in direct relation to make
revenue
or in direct relation to revenue, that goes towards cost of goods sold. So the example that I used earlier, I used a simple lemonade stand. So using a simple lemonade stand, your cost of goods sold would include your lime, the cost for your lime, the cost for your water, the cost for that is used in the lemonade, that is, and the cost for your sugar, that is, right? And you might also, if you have persons that you pay per batch of lemonade, that will go in that cost also. So let us say you have somebody that you pay to say, oh, for every 100 bottles of lemonade you make, then we're going to pay you $100. That's a direct expense that is linked towards the revenue itself, and those will go into cost of goods sold and not general expenses. The general expenses now would come under the utility bill. And it can get a little bit tricky sometimes because, for example, if you use a machine that uses certain amount of electricity towards making the lemonade, so to speak, then a portion of that can also fall, depending on your classification, can actually fall in direct expense and can go to your cost of goods. But your general expense, the utilities, your bank charges and all of those things will fall under administrative and general expenses.
Okay, thanks for that, Ryan. So Latoya, when you are looking at a company's income statement, what do you look for to determine a healthy income statement?
Okay, so when we talk about healthy income statements now, there are certain ratios that we bear in mind. And without getting too complicated, we talk about like the gross profit margin and the net profit margin. So just like how Roy was making reference to the cost of goods sold, subtract that from your sales, you get a gross profit. So that gross profit now, divide it up to your sales, you get what is called a gross profit margin. Now, what that tells you, Rochelle, is if you're pricing your goods properly. Are my goods properly priced? And then when you compare that, your gross profit margin with industry, am I with my competitors? Am I pricing the goods properly? Now, when it comes on to the net profit now, you would have taken out your general and administrative expenses. Now, what the net profit is going to tell you, is it that my business is running? Am I operating my business efficiently? So the top one is the gross profit margin, and then the bottom one is the net profit margin. Once these margins are in line or better than industry, the industry you're performing in, then you can safely say that you have a healthy, P&L.
So Latoya, I'm glad you mentioned those margins because I know we have some viewers who are in professional industry. So they may be lawyers, for example, or accountants, but they are running or engineers. So for example, for a lawyer, and I'm very interested in that particular group too, when a lawyer is working out and says, okay, this is my revenue from what I have billed, and I'm going to say billed and collected from my customers, okay, from my clients. How does the lawyer determine, or the engineer or accountant determine the difference between the cost of the goods sold and what is the general admin expenses? Because I think sometimes for the professionals, that's where they have a little bit of a problem.
If you're offering professional services, just as Roy highlighted in his illustration, there are direct expenses associated with a specific job. So if you have a client, you may have 1 or 2 interns or lower level consultants assigned specifically to that job. Now the hours they spend and whatever they utilize to get that job done, those are some of your direct expenses, and that would inform your gross profit. Now, when it comes down to your support staff now, your admin team, your bank charges, anything that is of a general nature, indirect expenses, now those are the expenses that are formed as a part of your general and administrative expenses leading into your net profit.
Oh, thank you. So in terms of even when we're preparing things like our invoices and our receipts, we have to be clear what the different line items are referring to. And as we're even working out if that service professional is making money, we're looking first at that gross profit to see what the margins are given what was done. And then we're looking at the net profit. This is helpful. Now, I just on the income statement, we talked about the gross profit and the net profit. What are the other things? And if we could just bring back up that income statement to remind our audience, what are the other key line items you look for, Latoya?
On the P&L?
On the
Okay,
income statement.
So on the income statement, so you have the income statement here. Key, your sales or your revenue. That's your top line. You always want to monitor. Is my sales where it needs to be, month over month? Am I performing within budget? So that's a key number to watch. Now the other thing about the sales is it tells you, do I have the volumes and am I right? Do I have the correct price? Price and volume, is that okay? Is my sales growing? Is my revenue growing? Is my income growing month over month? In this COVID period, some persons are seeing a decline in their revenue. How much did my revenue fall by? So that sales figure is a key figure to watch month over month. That's a key figure to watch. Now, the gross profit, you're watching your gross profit in collaboration with the gross profit margin, because you want to see, is it that I'm priced properly? Have I responded properly to industry? I mean, you're also saying, how is the volume? How are my sales volume looking? How is, and the gross profit margin will tell you all this. So if you're watching the profit margins, for instance, in an industry like construction, where profit margins are say 50%, or if you are above 50%, then you know you're doing good. If you're below 50%, then you say you're not on par with industry, which means that industry you're not priced properly, or you don't carry the volume that is required for you to get to that industry standard in terms of gross profit margin. You want to maintain and control your general and administrative expenses, because all of those expenses lead into your net profit. Right now, your net profit is what is going to, your bankers are looking at it to determine, can you service a liability? Can you service a loan? Your investors are looking at it. Can we get dividend payments? So your net profit, or earnings before interest and tax, as other persons call it, that key factor is another key number to be watching month over month. You want to see, am I increasing earnings? Is my earnings growing? Is my earnings sufficient to cover my interest burden? Is my earnings sufficient to make a dividend payment? So those are key numbers that you're watching month over month.
Thank you for that. Thank you for that, Latoya. Ryan, I want to bring you in because I know a burning question is then, okay, so we talked about cost of goods. We talked about general administrative expenses. What are some of the tactics that you could provide to our audience for how they can reduce some of these expenses on the income statement?
Well, definitely, there are a number of tactics that one uses to reduce expenses overall in a company. One of the primary documents to use is your income statement to actually reduce these. You actually start by going through your income statement line by line, right? Run through it line by line. Look at every single expense line on that income statement, and you start to ask yourself, what can I do to reduce this expense? What different decision I can make in this business to reduce or to push down this expense further, right? Now, also, at this point in time in particular, one needs to be careful as it regards to marketing spending, right? Advertising costs may be very cheap now, but one of the key things that you don't know how in this environment at this point in time it will convert to revenue. And one of the key things is that at this point in time, every single cent you spend, it needs to be revenue centric. It needs to be, you need to ask yourself, I'm spending these funds now from my business. How can it bring revenue into the organization, right? Now, another thing is a lot of us have all sorts of different subscriptions on our credit card, whether it be company or personal. We have all sorts of different subscriptions. One of the best way to deal with these, so that you don't forget anything, is to cancel out your card. You cancel out your credit cards and take new ones. So it simply means that most of those subscription services, you will have to resubscribe for the essential ones, right? Now, you can also ask your team, right? For whoever the persons who are in your business, ask them, put in front of them, look here, we're going to save some money this month, next month, going down through the rest of the year. Whatever amount of money you save in this organization, we're going to give you a percentage of it. So you're going to find that your team start to turn off the light more, right? They're going to leave the lights on. The air conditioner is going to run the entire day while nobody's in office and all of those things, because they're now directly linked towards the savings. So whatever is saving the organization, they will be getting a portion of that, right? And at this point in time, you should also start to reconsider some of the retainers that we have in place, because some of us have PR firms, attorneys, and all of that, and a constant retainer. Ask yourself, do I need that right now? And if the answer is no, cut it and move on and put a hole on it.
Yeah, on behalf of the attorneys, though, you need them. So thank you for that, Ryan. And I really appreciate some simple advice you gave, even the whole concept of canceling the credit cards and getting new ones, because you will only end up resubscribing for the essential things that you need. And you also put in that whole where you bring in now the team as a part of the cost savings, where everybody kind of wins from the cost saving because everybody gets something out of it. I really appreciate those tactics. And Ryan, I'm going to just stick with you for a moment on this, on switching our conversation now to the balance sheet.
Rochelle.
Yes, Latoya.
Before you go to the balance sheet, there's one point I wanted to add as relates to the income statement and expenses. Expense cost salary. It takes up at least 50% of the expenses on anybody's P&L, and a lot of persons struggle with it. And sometimes in strategic planning, what persons do is they advocate for an increase in complement. What I'd like to suggest is, instead of necessarily increasing complement, let us reinvest in the workers that you currently have by increasing training. So you invest in workers, you increase their training, increase their span, increase their knowledge base, increase their technical capacity, and therefore you don't have to take on additional complement that you want to lay off at a later point.
Thank you very much. That's some very practical advice. And Latoya, one of the things that we use the words income statement and the P&L interchangeably. Yeah. So I actually just got a WhatsApp message that somebody was like, so the P&L is the income statement. It's day one. But thank you. And so do you see some very practical advice? Because Latoya, that also reduces the complications that we may later have as we're hiring additional staff, and when reinvest in the people that we have. Thank you very much. So Ryan, over to you. The balance sheet. The balance sheet have another name, Ryan? It have an area?
Yes, statement of financial position. That's the new name or the latest name for it. Yes. Right? But generally, balance sheet, statement of financial position, they are also used interchangeably. And it's important to note that your balance sheet, it basically comprises of two rows, and it lists out your company assets and liabilities and owner's equity and money owned by the shareholders, right? And that is it. So that is the basic or the simplest form. Asset is equal to liability plus holders' equity. And that's basically what your balance sheet outline. But the truth is that balance sheet tells a lot more than that. It talks about the strength of your business, the ability to repay your debts, and all of those things. So if you should go look through the lines of a balance sheet, you will see many different lines. The cash that you have on hand, how much debt you have in the business, all of those are covered on the balance sheet. But what is most important, to tell you how much equity the company has. And that means how much money the shareholders own, how much liability the company has, and how much asset. Right? It covers all of that.
Okay, and just going back to that slide with that, there was just some explanations at the bottom of that the assets is the cash, inventory, and property.
Yes.
And liabilities, your rent, wages, utilities, taxes, loans, and so it's in terms of property. For some of our micro and small medium businesses, if, for example, you are running your business from home, you may have had a brick and mortar, or you started out running from home. The house is owned by you. In terms of where that would fall for the business concerns, does that come up at all?
Well, no. Well, it is your house is not. If your house is owned by you, it is not an asset for the business unless you transfer it to the business, right? It is still your asset. But how it will come in is that the business can actually pay rent for the space in your home, right? And that would be a business expense. But also important to note is that assets are broken down in different categories. You have current assets and non-current assets. And I think we'll talk about that further down. Whereas liabilities are also broken down like that. Current liabilities and non-current. The current liabilities are those that are due within a year, right? Or within the financial year. While your non-current one are those that go after the financial year, outside of 1 year, mainly. That's the main measure. And it's the same for your assets. Your assets, your current assets are those that can be converted to cash or can be liquidated to cash within a 1 year time, while the non-current ones are not easily liquidated within a particular year.
Okay. So for Latoya, let me ask you this. In terms of that balance sheet or statement of financial position, because we do have a mix of audience. We have some people who are micro businesses, some who are small, some who are medium businesses. When you're looking at say a micro or a small business, I just want to zero in on that particular target audience for a moment. When you're looking at micro and small business, what are you looking for in their balance sheet, or what should they be looking for in their balance sheet?
Okay, Rochelle, first I'd like to encourage them to keep accounting records.
Yeah.
Time after time, they approach financial institutions for credit. They need some funding, but because they do not have their financial statements, they are not in a position to benefit from debt financing. But from their balance sheet standpoint, there's so much of the balance sheet tells. The balance sheet is going to tell you, do you have enough cash, right? Do you have enough cash? Are you liquid enough? Or is that you have or do you have too much cash hanging around? So it can go either way. You either need a cash or you have too much cash. You refer to those things as a company's liquidity. Now, it also, from a small business perspective, you want to be on top of your receivables, right? Am I collecting receivables? Are my receivables current? So you're a small business person and somebody may come to you and say, okay, give me a credit term of 7 days. But when you look at your balance sheet and you realize your receivables is growing and it's growing and it's growing, you haven't collected. So you look at your list now and you realize that, hey, this person is 30 days, but they had a 7-day term. So you now pick up your receivables list and you start calling your customers. So for a small business person and even a large corporation, you need to be on top of receivables. Now, in a situation as well, Rochelle, like COVID is here now, and want to know, why Latoya, the receivables not coming in, calling people and people are strapped for cash. How do I get some cash in my business because I have my bills to pay? Now, one of the things they have to do, you have to pick up your inventory, look at your stock. You know, so on your balance sheet, you have an inventory, you have a list of inventory items, and you're saying, all right, you know what I'm going to do? These items are older types, or these items are new. Maybe I can have a flash sale. Maybe I can sell these items and bring in some quick cash. So that is very important for a small business. Another thing important for the small business, Rochelle, is your accounts payable. You want to know, because you need to know how much do you owe your suppliers. Yes. So for instance, in this COVID period now, you pick up a list, your accounts payable is telling you that you have this 400,000 worth of liabilities out there and they're all current. Maybe you can pick up a list, call your creditors and start negotiating. So saying to them, boy, you know, they understand the COVID situation. Let me see.
So while we get back Latoya, Ryan, Latoya was actually just going through some key points, and when you're as a business person during COVID, you run several businesses. What are some of those tips that you would give to a business person? We know cash is king, and that is reinforced, and you need to know how much money you owe, but how much money is owed to you that you can collect. So as a business person, what are some of the things that some of the decisions you had to make using your balance sheet, for instance, during COVID?
Well, Latoya touched on a number of them earlier, right? And one of the one is that you need to start negotiating your creditors. You don't want to be there with a very high payables, right? You need to start call up your creditors, negotiate with them to start push that payables down, right? Yeah. Also, we talked earlier about your spending need to be revenue centric. You need to ensure that every single thing you spend, every piece of money you spend, every dollar you spend from your business, it's towards earning revenue, right? It must go towards earning revenue. So all the frivolous spending, cut it, finish, right? Every single thing is towards bringing in revenue, right? And she talked about motivating receivables, which was very, very important. Call the persons who you have out there who owe you, because yes, you might have it in current asset that you have $100 million to collect, but is it really collectible, right? Some of those persons might be 120 days late, 200 days late, 500 days late, and if you're not watching your balance sheet any at all, you will miss all of this, right?
Yes.
You need to, as we say, make sure you spend, and that is linked. Number one is linked to number three. Make sure the funds that you're spending is revenue centric, because cash is king. So you want to ensure that you retain your cash at this particular time, and whenever you're spending your cash, you spend it on negotiable terms. You spend on terms that will benefit you or your organization. And also, be innovative in your business. Don't just sit down and say, oh, it is not going on this particular way now. Then you need to change it and do something else. But you need to learn to read your financial statements overall, because the truth is that every business speaks a language. And the business that your language speak is in finance. That's the language it speaks. And if you don't understand the language that your business is speaking, then it seems that you will not understand and you will not be able to make the changes when they need to be made in order to ensure that your business stay afloat. And innovation is a key part of that.
Oh, thank you for that, Ryan. So let me check if Latoya is back with us. So while we get Latoya back with us, and audience members, I am seeing entry and seeing some of the questions. We're going to get to you shortly. I'm seeing a question here from Omar on advice for informal business. Omar, we're coming to you. And Andrew makes a very interesting point, a very important point about the bank account opening situation for many businesses. And in fact, the project that we are on, the PSOJ Access to Finance project, one of the key areas we're looking at is simplifying opening of bank accounts, because a lot of what we're doing does rest with our ability to open bank accounts, to even, because without a bank account, we're not going to get a loan. So we're going to get to you. So, Ryan, and the good thing, is that we can juggle on the show, because Ryan, you're also a very esteemed accountant, unlike myself. So let us now get into, and you keep hammering, cash is king. Stop the frivolous spending. Anything that you're doing must be revenue centric. It must be towards making money. And the cash flow statement is key in the making money for you to know how much cash you have. So
Definitely.
let us talk about the cash flow statement. And I think we have a simplified cash flow statement that we can talk through.
Yes, definitely so. And one of the key things about your cash flow statement, it actually basically what your cash flow is. It shows the cash flow in and out of your business. Where do you spend your money, right? It also used to determine the short-term viability of the company, right? Do you have enough cash on hand to cover your overall expense? Most cash flow is broken down in 3 different segments: operating activities, financing activities, and investing activities, right? Operating activities normally cover your day-to-day operations of your business. And one of the key things about operating activities, for example, in analyzing cash flow, if you want to know if you have a strong cash flow or a company have a strong cash flow, for those who are in analyzing for investment purposes, start to look at the operational activity. The operational activity should never be negative. This example here that we have a good deal company that have a negative operational activity, mean that yes, the company is running, but from their operating, from their activity, from their day-to-day operation, they're not making any cash in at all. Right? The cash flow is in a negative position. And that's one of the primary things that you will look for in doing any analysis for a company, that the operating cash flow should be positive. Investing activities talk about investing activities to capture cash that you spend on buying and selling long-term assets such as equipment or property, right? And a stable or a growing business typically has a negative net cash flow from investment activity, right? Because the more the business grows, the more you will spend on equipment and property and all of those things to boost your operating activity. So it is quite all right to have the investing activity in negative. Your financing activity, it is talking about cash flow from financing activities such as cash flow from issuing or paying off debts. For example, if you take a loan today for your business, that would actually capture, it would actually come as cash inflow in your financing activity, because there are many persons. If you float a stock on the stock exchange and you get $100 million from the stock exchange, it is cash flow coming in from financing activity. So yes, it will show a healthy cash flow, but the truth is that what happened in the cash flow statement, you want a positive cash flow so that you can actually have enough funds to pay off your financing activities or to reduce your financing activities overall.
Okay, Latoya, welcome back.
Thank you very much, Michelle. Thank you very much.
You just disappear upon us and then you just reappear. I love it.
Oh, I have a reboot and come again.
So Latoya, you are very familiar with the cash flow. You'd have heard some of what Ryan went through. So
Yeah.
is there anything you want to add to what Ryan has set out? But also very importantly, looking at the cash flow statement, what are you looking at to determine a healthy cash flow?
Okay, so the thing about the cash flow now, Rochelle, you have to complete your income statement first, and you have to complete your balance sheet before you get to the cash flow. Now, the cash flow is the banker's playground. This is what everybody wants to see. They want to see, are you making cash? Where are you spending cash? So you hear Ryan talk about your operating activities, your daily activities. Are your daily activities generating adequate cash? You go to the bank, whether it's a small business or a corporation for a loan. The first thing they want to see, the cash that you have made from operations and is it sufficient? Is it sufficient sufficient to cover my interest payment. So if I take up depositors' funds and lend you, is the cash, will you make enough cash to pay back that depositors' money, interest on it? No. So when you're considering capital investment projects, you want to buy your first building as an entrepreneur, or you want to invest in a new building as a corporation, right? Then you say, then the bank wants to know, are you generating enough cash? Once you invest in these new capital investment projects, will you be generating additional cash sufficient to service my loan, pay your dividends, and do what you need to do?
Okay. And it's very important, the point that you made, that each of these financial statements speak to the other. So you don't prepare the cash flow statement in isolation from the P&L. You're going to need a balance statement to make some critical decisions. So across the board, these three financial statements are critical to your decision making. I just have to point out a quote here. Andrew Higgins, thank you, Andrew. So Andrew says, hashtag revenue is vanity, hashtag profit is sanity, and hashtag cash is king. Thank you for that.
Cash is king. That's right. The cash is king. The cash is king.
So for both Ryan and Latoya, you have given us some serious information for us to work with. Latoya, let me start with you, because sometimes our viewers are asking, where can I get additional information? How can I reach out to a Latoya? How can I reach out to a Ryan? So Latoya, can you just let our audience know how they can find you to get any additional training? What services do you offer?
Okay, so where we do a lot of services, Rochelle, I do project management services for finance projects. We offer training for entrepreneurs. We offer training for persons who want to be able to read their financial statements. So you can contact me directly. I don't know if the numbers will come up. I'm 876-997-2482. I also partner with the JBDC. So if you're on a small business side and you need that kind of support, you can contact me through the JBDC. And if you're a corporation and you have a project that you need to get an accounting-based project, a numbers-based project, you're changing your systems, you're doing anything of that nature, you can also call me.
Thanks for that. I just want to put in another plug for JBDC. For those of you who are not aware, the Jamaica Business Development Corporation, which is one of our, I like to call it an essential service for our SMEs, and their information is available online. The team members there are very open to the discussion, very helpful, and are able to guide you with resources. So that's the Jamaica Business Development Corporation. And Latoya Fuller is available through the JBDC, but please note her number. I'm gonna put it on my phone right away: 997-2482, and you put the 876 right before it. Ryan, how can our viewers find you, and what kind of services do you offer to help our small businesses?
All right, definitely so. At Sure Financial Services, we not only provide business advice, but we provide financing for small and micro businesses also. We provide business management training. On a personal level, from my perspective, on a personal level, I provide business analysis, service, investment analysis, and all of those things. And if one would need to reach me regarding same, you can call me at 281-4357. If you're interested in financing, direct financing for your business in terms of loans, and you can call 622-2618, and you reach or visit any one of Sure Financial Services offices. We are at 5 parishes island-wide. We're located in Morant Bay, St. Thomas, Mullines Road in Kingston, Fernley Avenue in Maypen, Santa Cruz, St. Elizabeth, and Savannah Lamar in Westmoreland. Just find us or find our Facebook page, SureFinanceJM.com. JM for Jamaica, SureFinanceJM.com, and you'll find us there. You can call me direct, 281-4357, and don't forget the 876.
Yes. So that's so for those of you who are just trying to remember the number and your head not so good like me, for Ryan it is 876734 sure. I like it. And 876281 help. So for both our guests, I mean, we cannot thank you enough for the tremendous support that you have provided for the program, but especially the time you have taken to break down financial statements and to offer your services to our viewers. So Ryan, let me start with you for the wrap up. What do you want to leave our viewers with? What last words? And then Latoya, I'll get your last words.
One of the main thing I wanted, and I just want to recap because I said it earlier. The language that your business speak is finance. You need to know that language. Spend time understanding the language. Don't just take what your accountant is saying to you, right? Don't just take your books to accountant and say, please do my accounts for me. You don't know what it is saying. You need to know what your business is doing and what it's telling you so that you can actually make decisions on the fly. Because if you're going to wait 3 months, 6 months, 1 year to know that something went wrong in January, then you would have gone too far. So understand your numbers, spend time learning it, call persons like me or Latoya if you have problem, and we'll assist you to read it and know it so that you can actually understand the language.
That's right.
Thank you. So the language that your business speaks is finance. Latoya.
Boy, Rochelle, it is a numbers game. Business is a numbers game. And we can't wait until at the end of the year to be looking at numbers. We need to be looking at numbers weekly, monthly, if we're serious about managing our business. So know your numbers, and if the help is available, PSOJ has done a very good job in terms of getting this information out. We are all available. The help is there, just ask for it.
Yes. Thank you both so much for taking the time to join us today, and happy emancipation to both of you. Thank you very much. Ryan Campbell, the Shore Financial Services, and Latoya Fuller, Chartered Accountant, JBDC Partner. Thank you all very much. What good? Because viewers, we're going to be joined now by Nevada Poe. So Nevada, we're going to be talking a little bit. We're going to pull it all together now, because last week we got quite a few comments and questions from our viewers wanting us to delve deeper into the line items. So let's pull it all together now.
Yeah, I thought it was fantastic having basically 4 different people talk about the same thing, because again, we're finding that people learn in different ways and different voices. So sometimes the right teacher for one person is not the right teacher for others. So that's critical in terms of when you're trying to learn finance, right? When you go out there and you go to one teacher and it doesn't work as well, do not say to yourself, you know, boy, this is not for me, I can't do it. It may not have been the right teacher for you. So that's also why at PSOJ, we want to try and give you access to many different types of trainers, many different types of styles for you to be able to find the right person that is is right for you. Yeah. So again, summarizing the income statement, revenue minus cost of goods sold gives you your gross profit, which means you're making money at the variable cost level. You are covering your costs, right? The gross profit minus your other business expenses like rent and the salaries and so on gives you your operating profit. So it means and if that's positive, your operations are covering your costs, the cost of doing business. Then you've got the operating profit, and you take out any financing that you have to spend. So interest on loans you've borrowed from the bank, minus any taxes you have to pay. And then you get the net income. If the net income is positive, then you're in good business. And you want these numbers to be growing, positive, as Latoya said, industry comparable or better. Then you know you're really, for your industry, you're in really good stead. Yeah. The income, so that's the base of the income statement. The balance sheet, current assets include things like your receivables, your inventory, near term. I saw a question actually that came about receivables and when you must write them off.
Yes.
The truth is, right, so we're afraid to write off the receivables because it's money that we don't want to say that, okay, we're not going to get it. But in your heart, you often know. when the money is just not coming in. So if you've given somebody net 30 and it hasn't come net 60, you've called, they're still taking your call and they're making a promise, you can probably still hold on to that as a receivable. When them start to avoid you and not take your call, and you are now 80, 90 days after when you originally agreed, then you probably should start to think about writing it off. In fact, in those situations, what I try and do is tell the person, you owe me $100, but let's just clear it for 40 and never call my business again. No, I mean, but you know what I mean? So you kind of like, you work it through, but very often you go into a business to do some consulting and then have receivables 2-3 years on the book. And you kind of like, you know, I know you're not willing to let this go, but this really is no longer an asset. You don't really have it. Then you have the longer term assets like a building and so on, or some investment that you have done. You have current liabilities, rent, wages that people have worked for you, but you haven't paid yet, commissions and so on. And long-term could be like a long-term bank loan, could be like a long-term mortgage. And then of course, shareholders' equity is what is the business valued. When you take all of your assets minus your liabilities, what's left over is the shareholder equity. And that's usually a combination of what capital was infused, what money was infused into the business at the beginning, and then all of the retained earnings that you have kept in the business. That is where you are creating value. And of course, cash flow.
Hold on 1 second.
Yes, go ahead, Rochelle.
Nevada, just 1 second, because Christoph has actually asked, this is the second time that he's putting it out. I was going to get to it at the end, but I don't want us to leave without getting to this question.
Yes.
Yes, throwing this one back out there. Are there any places to easily find industry standard for profit margins? Because we mentioned last week and this week that you want to be comparing yourself against industry standards, but where does one find these industry standards?
It's unfortunate, it's quite difficult in Jamaica, and that's one of the things that the PSOJ is trying to change, that we need a basic board that does statistical collection of data. Here's what we typically do. Often there's data available with Statin, and when we're doing sector by sector stuff, just for example, Mark Tracy, who is one of our data geniuses at the PSOJ, and much of the time when he's collecting data, you find that he has to put together data from multiple places and then come up with a best guesstimate. So one thing is just to see what's out there in terms of Statin, and sometimes just running articles on companies, just Googling companies, because very often, for example, in a annual report or in a comment made by some financing, you get some sense of what an industry is. So even if it's a bigger company than you start to bound the problem. Also, do not overlook some stats, for example, are much more easily available in the United States on margins and so on. Now, again, America is a very different market. A lot of companies are more technologically advanced, but again, it begins to create a bounding of the problem. So if an American business, for example, has in the same industry as you, has a 30% gross margin, and you are at 10%, then you're probably sort of in the same zone because you maybe not be as technologically advanced, that kind of thing. So again, unfortunately, we don't have a simple single place where stats are shared. One of the things that the PSOJ is going to try and over the course of the next year or so is trying to start doing data collation by doing surveys and asking businesses. And then we'll periodically put out a report that says, in the restaurant business, so we'll ask 50 restaurants, let's say, and they will say, in the restaurant industry in Jamaica, the gross margin is X, or between this and this. And therefore, everybody can kind of have a sense. But it is definitely a missing, not easy to find, but it's there in a kind of difficult way.
Question, Christoph. And in fact, Nevada, if we just go quickly to our poll, because I saw Christoph last week, and I'm seeing a lot of our viewers too, we asked, did you watch last week's episode on financial statements? 32% of our viewers said I tuned in last week. 21% say they didn't catch the live but watched the recording, and 47% said no, but I'm glad I'm here for part 2. So we're encouraging you to go back. We have some long weekends coming up in Jamaica, and over the summer when it's hot outside, just go inside and log on to the PSOJ Facebook page and go through the episodes. So last week's episode, this week we're building on the information from last week, and as Nevada said, we provided 2 different set of trainers so that you would have different voices because each of us learn differently. So Nevada, what other
quick wrap up now on the cash flow statement, right?
Yeah.
And again, the cash flow, you want more cash in than out. Cash flows comes in several ways. If it's a healthy business, the operation itself is throwing in cash flow, right? So that's very good. Whatever it is, after the net effect of the operations is sending cash flow in, that is good. The other way cash either flows in or out of the business is whether or not you've done investing. So if I put, for example, a deposit at a bank, or I'm doing shares and I'm getting interest from those deposits, or those shares are appreciating and I've sold them, that's also cash flow coming in. So it can be by operations, or it can be by investing, or it can also be by financing the business. If I go and take out a loan and therefore get money from the bank, that's also cash in to be able to run my business. I remember the key thing with the cash flow is you want more in to be able to cover your working capital, to be able to cover the loans, to be able to cover things that you can do. Working capital, again, is the capital that's in your business. You need to buy inventory, buy material. Negative working capital is when you have a situation where you buy materials now and you sell the goods that you have bought a month from now, right? So you have to pay out money before you actually get money in. That's a negative working capital business. A positive working capital business is when you actually sell before you actually spend the money. So, for example, an Apple phone, very often, when you go online and you order an Apple phone, that Apple phone often doesn't start being built until you're paid. So it's what's called a positive working capital. Or sandals, for example, is one of Jamaica's best positive working capital businesses. Why? You buy your holiday in June, so they get the money, but they don't expend anything for your holiday until December, when your holiday actually starts, when you arrive, and they've got to get meals for you and so on, which means that sandals gets a positive working capital. The money comes in, cash comes in before it has to go out. And then there are those, somebody talks about the informal businesses. Many of the informal businesses are what we call cash businesses. So there's very little time between money coming in and out. For example, if I'm a market person, I buy my goods from the farmer in the morning, cash. There's no credit usually. And I sell my goods to people in the afternoon, cash. I don't usually give credit. That is a tight income statement, cash flow statement, and very little balance sheet, because everything is just moving very quickly. And I turn my inventory, I turn my goods 2 or 3 times over the course of the week. So that is what you call a tight. You can see everything in that business. You do have to make sure you put some profit in for some cost in for pilfering, for stealing, for spoilage, that kind of thing. But you basically are seeing your income statement, your cash flow statement live, active, because there's very little time delay. Excellent. It was very good 2 weeks, Rochelle. Two incredible weeks.
And I really have to say a big thank you to our viewers and their very insightful questions and commentary. So Felicia says, for example, doesn't TAJ have everyone's financials filed each year? Can't Statin get the information there and come up with the data? Persons are more likely to be honest with TAJ than a random person from a market survey. Very good point. One of the things too, though, is that the more businesses that are in fact formalized and paying taxes and preparing financial statements is the more information we'll have. So you'll find that information is growing as persons actually start creating more financial statements. So Nevada, in terms of our small and medium or micro small businesses, a lot of people are looking and they're saying, okay, all right, I get you. I understand the cash flow, the P&L. There are some things in there like shareholders, equity and stuff. I'm not so wrapping my mind around all of that because I did just register the company and we just have one shareholder on it.
Yes, but one shareholder still has shareholders' equity.
Exactly.
That's the value of your company. That's the money that you actually put in and the money that you kept investing from the operating or whatever after the company was growing. So just because you have one shareholder doesn't mean you don't have shareholders equity. You are the owner of the shareholders equity that your business is accruing over time, even if you're not calculating it, by the way.
And I think one of the key messages that we want to make with our business people is whether or not you are a very large corporation or a micro business, and is you one another business, all of these financial statements and these line items are important, and become even more important when we understand how we use it for decision making.
Yeah, Rochelle, there was somebody who had a question about any advice for informal businesses.
Yes.
These financial statements are also valuable for informal businesses. Your formality or lack of formality is not what's relevant. These statements allow you to understand your business. So even if you're an informal business, I'm telling you this, if every year or every few months you're working as hard as you possibly can and you're not getting any money out, there is something wrong with the core operation of your business. You're not pricing it right. You're not seeing all your costs. And therefore, you have to put this lens on it to be able to do better. A sure sign that you are not on top of your business is if you're working morning till night on the business and money is coming in and you're just not retaining anything for yourself. You're bata, and believe me, there are whole heap of Jamaican businesses that bata for years, and they don't do the issue of disaggregating or looking at the numbers to say, am I pricing this high enough? Am I putting too much cost into this? Is this a realistic business? Will this ever make me money? Because that can also be the thing, you know. You're bata, and you don't put a salary for yourself in there because it's your business. So it doesn't matter if you're formal or informal with respect to having financial literacy and being able to understand what happens in your business.
Yeah, and I see Donna is asking about your favorite area, beauty salons, which is one of the key areas that has been able to come back up because you know we have to fix up ourselves. So Donna is asking us to touch on beauty salons. Any advice you would give to the beauty salon owners, the hairdressers, the barbers?
Yes. Well, certainly, again, congratulations on being one of the sectors that actually at least is holding, and in some situations may even be maybe growing. Beauty salons, as we can understand, right? You typically buy the materials, the hair gel, the this, that, before. So your business is you have to expend the cash, and when the women or men come in, as at that point you get the revenue. So it's what's called a negative working capital business, but it's not a long cycle because typically you don't buy one whole heap of gel and put it in the store. You buy just a little bit to get you through a few days or through a week or 2 weeks. So it's not a long cycle. Again, most hairdressers and barbers tend not to give credit. So I'm assuming that, you know, the whole issue of there aren't receivables on your balance sheet, right? Nobody owes you money. Them pay you. When you cut me here, I pay you right there, and you think. Businesses like that again. So where might the problems be? So again, if you work working hand, check again about your pricing vis-a-vis your costs. So what you want to do in that situation, for example, really focus a few times on what it costs you to do here. So this is what I would do. You have a beauty salon and you're just not making any money. You just see yourself every week not making money. So you know what can be happening. Either you're pricing too low or your costs are too much. So literally what I would do is this. Every time you're about to do somebody's hair for 1 day, so you start to understand, right? You take a cup, so that a measuring cup that you understand the amount of inventory that you're using. So say it is that you say a cup of shampoo is where you wash this hair. And you wash the hair and you do a thing. Then you do over the course of the day, but you're measuring the shampoo. And then you say 10 cups of shampoo, 10 little caps of shampoo actually washes 8 women. You can then start to know your actual costs. And you do that with all of the little things and say, all right, now, this is what it costs me to wash and set. This is what it costs me to tint the hair, blah, blah, blah. This is what it costs me to think. And now, am I pricing higher than that? And higher than that is not just the cost of those goods. Remember, I, as the hairdresser, also need to be paid for my time. And the question is, how much is an hour of my time worth? So I say to myself, how many people can I do in an hour? I remember somebody came under the dryer while I'm doing another one, etc. So I said, you know what, do it three people. So given the cost of my input And the value that I put on my time, am I pricing correctly? Very often in the situation of a beauty salon not making money is they've not understood the costing, and costing, by the way, in a beauty salon could also be filtering. Some of your staff could be taking like a bit of shampoo. So you have to watch for that too. How come we didn't buy 2 big bottles of shampoo and it's finished already? And then you go back to buy. You don't even think that, hey, some of my costs are actually gone. So it's all about investigation, financial investigation into your business. I don't care if you're formal or informal. Investigate your business, your costs and your pricing.
Investigate your business, your cost and your pricing, so that ye shall not batter.
Exactly.
Yeah. And in fact, these are some important lessons, because many business persons just cannot understand, with all the effort, with the number of customers coming in and all the spend, they still can't understand why we're not making any money. And because we don't understand our business, we cannot.
Yes.
So knowing how to actually do hair is not understanding the hairdressing business. That's just a part of it. We have to understand our numbers. Yeah. So Nevada, how long? This is what, episode 19?
Episode 19. And guess what, Rochelle?
What?
We are at 2 million views. 20th episode is next week and 2 million views. In fact, to celebrate, we're going to have a competition. And the winners are going to get their video featured on COVIDcast. We're going to give them a business session, much often about their business, help you look at your numbers and tell you where you may or may not be making money. And we're going to give you a feature on our PSOJ financial access page. How do you enter? You post a 1-minute video explaining something that you've learned during the COVID period, or that can be beneficial to others, other SMEs, and how it has impacted your business. So anything you either learned by watching the program, or maybe you picked up a piece of advice from a friend or an article that you read, something that you think you can, an SME can be helped. And then follow us on the PSOJ page. Use the hashtag COVIDCast20. And we're going to select 3 winners. 1 with the most likes, and 2 just based on a PSOJ assessment of your business and the things that you have learned. So there'll be 3 winners. And it's in celebration of our 20th episode and 2 million views. And by the way, Rochelle,
when is the deadline? When is the deadline?
The deadline is the 11th. The deadline is the 11th. Yes, 11th of August, and we're going to put it on our COVIDcast on the 13th.
Okay.
So that's bad. And our 2 million views, Rochelle, come from all over the world, across the Caribbean, across the diaspora, in America, Canada, England, everywhere.
So
them come and them checking it out.
We're international. So
international.
Right, and we've gone international. But let me tell you, none of this would be possible without our weekly viewers who are here with us, sending in their comments, sharing the videos, liking the videos, and spreading the news. This program is for you. It is for our business people. We are saying that we are going to be successful if we understand what we are doing. So we're saying hashtag no more batter. So please remember to subscribe to us on YouTube, share our videos. For those of you who are just catching up, spend some time to look back at some of the old videos, because we go through so many business concepts for you. And we are at 2 million viewers. Thank you. Thank you. None of this.
Thank you very much. Absolutely. So we have some, Rochelle, we have some other news. No more batter, say Romeo. We have some other news, Rochelle. The PSOJ is putting together a conference, an online conference on August 14th. We call it Crossing the Chasm. How you pronounce it? It's chasm or chasm?
It's chasm.
Chasm. Yeah. Crossing the Chasm, the road to recovery. Rochelle, you want to talk about it on the 14th?
Yeah, so it's going to be Friday, August 14, running from 9 a.m. to 5 p.m. and we will be having presenters from public and private sector from multilaterals. It is going to be a day that we're looking at the road to recovery from COVID. So we're going to be looking at various sectors in the economy, how they're performing, and what is the outlook. This is going to be a very, very important conference, and it is always important that you have a seat at the table. And we are saying you can have a seat at the table. We'll have presenters such as the Bank of Jamaica Governor Richard Biles. We'll have the Jamaica Manufacturing and Exporters Association President Richard Pandui. We're going to have business people like Michael Lee Chin. We'll have the President of the Private Sector Organization of Jamaica, Keith Duncan. Are you on the list? Are you on the list so that you can potentially receive an invitation? Email us at sme@psoj.org to get on the list. Preference is going to be given to PSOJ members, and we're encouraging our small businesses to become PSOJ members, but ensure that you've emailed us so that you can potentially be on the list. Now listen, sometimes we see these online conferences and we say 9 o'clock till 5 o'clock. Who will live long day? Yeah.
Learn.
We're in that time. And you know what? We're not able to make sometimes some prudent decisions because we don't know what's happening around us. So when we're looking at things like gross profit margin, industry standards, this is where sometimes you're coming to get that kind of information. What is the outlook on your particular industry? What is the outlook on your economy? So that you are able to make some informed decisions. So please, email us at sme@psoj.org. The conference is August 14th from 9 a.m. to 5 p.m.
Rochelle, I just want to add, for example, at this conference, we're going to hear from the IDB, the International Development Bank, about what other countries have done in response to COVID that has been positive, both from a private sector and a public sector perspective. We're going to hear from the Bank of Jamaica about the overview of what's going to happen to our dollar. And to the extent that your business is impacted by the value of the US dollar, you want to understand how are some of the minds in Jamaica thinking through that. We're talking about what is happening with tourism and what we see with the jugo economy and tourism, and how is the tourist sector thinking through that as a possibility. We're going to also hear from financial institutions and who's coming up with innovative financial products to be able to get small and medium businesses through these times. You want to come with your pen and your paper, and you want to listen to how some of the best minds in the country from the private and public sector are going to try and solve us. What's the chasm? The chasm is the period between now and when we have a vaccine widely available and things go back to whatever normal is, even though there'll be a new normal. A lot of us recognize that we're going to have to struggle through some very difficult times, and it's not a 3-month thing, not a 6-month thing. We could be here for 2 years. And therefore, let's make sure we as citizens, we as business people, we as consumers start thinking about Jamaica and our own future in the context of the way we are now.
Very important. And Nevada, you know, as we described the conference and we spoke of the name of the conference and crossing the chasm, I know some of our viewers are saying, so why don't have to make it sound so chasm? So you know what a chasm is? It's like that big gaping hole.
Yes, like the crater. What do you think is in Arizona in the Grand Canyon? Canyon. Yes.
The Grand Canyon.
How are we going to cross this Grand Canyon?
How are we going to cross this Grand Canyon? And we also, you remember, we are educating and we're sharing in every way. So we all share a big word to chasm, and it's not chasm, is chasm. So Nevada, next week, Thursday, I was reminded that again, that next week, Thursday, is actually Jamaica's Independence Day. Absolutely. And some people were saying, since it's a public holiday, we're not going on leave. So we're not going on vacation leave. We will be here on a different day just for next week, because we're not going to stop this momentum that we have. So we're going to be here next week, Tuesday, right here at 7:30 p.m. And we're going to be giving an introduction to the online conference. We're talking about crossing the chasm, that road to recovery. And we're going to have guests like Keith Duncan, the PSOJ president. And Keith is going to be talking to us about what he's seeing happening in the economy and why this conference is important. So he's going to be touching on some of the things that we're seeing in the economy. We're going to have Nicola Madden-Gregg, and Nicola is going to be telling us about the impact of the pandemic on tourism. Now, you cannot miss that update on tourism. Henry Mooney will also be joining us from the IDB, the International Development Bank, talking to us about the regional impact and the public and private sector responses. So we're really going to be having a very rich, robust discussion about what's happening not only in our local economy and in a particular industry that is really affected by COVID, because we are on a very slow recovery road with tourism, but we're going to be looking at the regional responses, what's happening. So you're going to get, like, you know, sometimes you get a little taste and buy. So we'll be getting an opportunity to kind of get a flavor of what the conference will be like. And for those of you who are wondering, is there a cost to the conference? The cost to the conference is getting on that email list, sme@psoj.org. Anything you want to add, Nevada?
No, that's it. By the way, our students, to the extent, you know, sign up as well, because if we have extra spaces, anybody studying economics, anybody studying business, this is the kind of conference. Here it is, a real life discussion that's different than the books, the history books. This is a live discussion about economics and business that's affecting your country right now. And therefore, from an intellectual perspective, it's very rare to get something this exciting that's going to be discussed by the leadership, by a lot of the leadership in the country. So definitely plan on joining us, doing what you need to do, and just come learn, come listen, come share your ideas, because we're sure you also have perspectives to share on this, and let's see if we can figure out a way to bridge this chasm, bridge this gap, and get to the other side in sort of a healthy, productive economy. Rochelle, thanks again. Everything was great.
Thank you, Nevada, and thank you to our guests, Ryan Campbell and Latoya Fuller. Thank you so much for the time that you spent to carefully and systematically just go through and break down these financial statements, reminding us that the language of our business is the finance, the language is the numbers. Latoya reminding us that all of these statements matter. The income statement, or the P&L, because some of us know it as the P&L, the balance sheet, or the statement of financial positions, one and the same thing, and your cash flow statement. Remember, if you did not get last week's memo that goes through these statements in details, email us at sme@psoj.org. Next week, we are back, but we're back just for next week on Tuesday, because next week, Thursday, is a public holiday. And next week, Thursday, we're giving you a taste of the online conference. The online conference is when again? August 14th. For those of you who are just joining us and did not catch that, we are at over 2 million views, thanks to you. And there will be a little competition. The deadline for entries in our competition is August 11th. And you can go on our Facebook page to get more information on how to enter. And for small businesses, it's a great opportunity for you to showcase your business, because you're going to do a 60-second video telling us about how you have survived COVID, or what you have learned that you can share with other SMEs. We are building a community of business people that understand their business and understand their numbers, because as we're crossing this chasm that has been created by COVID-19, we're coming out stronger. To all my Jamaican people everywhere, happy Emancipation Day. We can free ourselves from the bondage of the ignorance of understanding our business. Let us know our numbers. So see you again next week, and it's going to be next week, Tuesday at 7:30 p.m. for another episode that will now be episode 20 of COVIDCASTJA. My people, walk good. See you next week.